Testing, testing. Testing, testing. Good girl. Hello, welcome to Canadian Money Talk. If you have any questions about Canadian investing, personal finance, let me know. I'm using my laptop and it's kind of choppy. I hope you guys can hear me okay. Anyway, any questions about Canadian investing, personal finance, let me know. We had NVIDIA report today. They did quite well, but the stock actually went down just because the expectations are so high. I think this happened to them last time as well. To me, it's just a little bit overpriced. Welcome, Canadian Money Talk. Let me know if you have any questions. Canadian investing, personal finance. Happy to help as much as I can. Hello, Gaia. Yeah, no such thing as a newbie question. Can you open a TFSA at Wealthsimple? You can. I have one there as well. If you already have one at another institution, for sure. You can just make sure you don't over contribute your limit. Like you have one total limit. You can't. Sorry, I've got a new little dog and she's wandering around. Need to go outside. No, you're good? Okay. Sorry, I adopted a puppy 2 days ago, and it's been a little tough. So yeah, guy, all you have to do is just make sure you don't go over your total limit when you sum up the two accounts. Okay, that's the only thing. You can have as many accounts as you want. You just can't go over your limit. BB says, what is your view on the medium term for Canadian telecoms, Bell, TELUS, Rogers? I own Bell and TELUS. I don't own Rogers just because of the whole family thing. Just makes it a little bit difficult. Go outside, girl. Good girl, go potty. Good girl. I'll be right back. She just went outside. Good girl. Good girl, go potty. Good girl. Good girl, go potty. Sorry, I know this makes for great lives. Good girl. Okay. Oh, that's a good girl. Oh, yeah. Oh, yeah. Oh, yeah. Okay, so back to telecom. Sorry. I own. I'm buying Bell and Telus right now as well, and um, Bell. With the purchase of the next company, I think that's the only way to grow in Canada because our population isn't increasing and the immigration kind of stopped happening as well, and just the Canadian birth rate is like the replacement rate is 2.2 children and the birth rate is 1.3 children. So we need immigration for the population to even sustain itself, let alone grow. And the market is saturated, so that's why Bell went out and bought that company. It got them into more debt, so that's not great. But I think that's sort of their only chance. TELUS, I think, is a good company as well. They're not on the ropes like Bell is, so I'm kind of buying both of them. I have more of TELUS, and Rogers doesn't pay enough of a dividend for me. BB says they are currently working with lots of debt that they do not seem keen on aggressively paying down. Yeah, when they sold that the sports company, I had been hoping they would pay down the debt, and instead they just got the money in order to buy Ziply. So it is what it is. That was their decision. You hope that they know what they're doing, and for us to second guess them, And Bibi says, I was surprised that Bell did not use the money from the sale to pay down debt, but went ahead and bought a U.S. company. Yeah, it's a risky play, but I think that's the only thing that's going to stop them from basically flatlining. All of the Canadian companies um, are in the same boat, as far as I'm concerned. This is why U.S. companies are buying. Why Canadian banks are buying U.S. banks because that's where you get growth. Otherwise, Canada, you just don't get growth. This is personally why I am uh, keen on emerging markets because demographically they have a young population, they have a population that's going to keep working for a long time, and they have a population that's going to keep growing. So same theory here. Like Canadian companies without a growing population have a tough time making more money. So. Um, Bibi, yeah, no problem at all. There's 5 people on right now. I do lives on TikTok and on YouTube. I alternate them. So this is YouTube's week. I get more people on TikTok, I guess because I have more subscribers as is normal on TikTok. But yeah, I'm up to date with the questions, so feel free to ask. Um, like I like telecoms in general just because they have an oligopoly, but also there is quite a bit of competition between basically the 3 big ones. Um, which is sort of strange. And the market is saturated, and they're just competing on price for the most part. Like they all roughly do the same thing. It's just that TELUS started its fiber upgrades earlier, so they got cheaper debt than Bell did. They started later. They're finished now, but they still got the debt left over. I'm not sure whether they're mostly fixed rate or variable rate for their debt. Um, Obviously, variable rate would be coming down along with the Bank of Canada interest rates, but fixed is set in the bond market, and because people just sold their bonds in order to buy stocks, the yields on bonds went up. So actually, fixed rate debt um, isn't coming down. So that's a problem. Then BB says maybe the debt burden is not as big of an issue as I believe. For Bell, it is. Like they have significant debt. Um, the way to go would have been to pay it off. So selling the sports franchises basically. As far as I know, it was like a company that owned multiple sports teams. Um, it would have paid off the debt. What I think will happen with Bell, they've already announced that they're going to stop increasing the dividend in 2025, and it would not shock me whatsoever if they. I'm just looking down at the dog. Sorry. Um, it wouldn't shock me whatsoever if they cut the dividend, not to zero, but if they just cut it by a third or what have you. Um, with the share price being where it is, you're still going to be getting a hefty yield. So it would be good for the company. Um, they seem to have the cash flow to pay it off, to pay the dividend. But once you figure in the interest payments and if they have any capital expenditures, the free cash flow doesn't cover the dividend anymore. So they're up to their eyeballs. So then Bibby says with the Trump tariffs, and by the way, guys, I just go in sequence as you ask the questions. So if you have multiple questions, ask them. Whoever comes up first, I'll answer to the best of my abilities. And by the way, none of this is financial advice. I'm neither licensed nor, more importantly, insured for financial advice. And of course, I don't know you as far as your risk profile and time frame and all that. So Bibi says with Trump tariffs, it is expected inflation to tick up, so debt payments will at least stay flat, not decline. I mean, inflation is driven by many things. Price of oil could go up based on the geopolitics. Um, so there's various things moving inflation, including rents and cost of real estate. So debt interest could stay flat. So if you have higher inflation, well, if you have higher inflation, they could even sort of in an emergency move, they could raise the interest rate. So in that case, it could actually go up. But yeah, you could say it could stay flat. Higher inflation doesn't mean no more cuts or actually even increases. The central banks wouldn't want to look like they're wrong, but they need to do the right thing. So if inflation suddenly rears its ugly head again, they would most likely start raising. They had a few cuts, so now they would probably feel better about raising as well. So yeah, no, that's a good point. It wouldn't have to come just from the tariffs, though. That's the thing. In fact, if somebody actually explains the way the tariffs work, or most likely work, um, he doesn't like high interest rates. So if somebody tells him that tariffs are inflationary, he might back away from it. But he didn't in his first term. But of course now it's a different situation. So very interesting uh, things, how everything is moving around. So BB says, I'm also adding to my position in the banks. Yeah, me too, TD and um, what's the other one? A little bit to BMO as well. Um, Royal and CIBC are a little bit expensive, so I'm not adding to those. But I've been specifically hitting um, TD because they're cheap, and BMO has had some issues as well. So, um, do I see the banks moving sideways for the next 5 years? Yeah, could very well be. I'm hoping Bank of Nova Scotia, which for years I had been piling into because they were constantly cheap, I hope keep they keep going up. BMO had, I think, 3 bad quarters in a row, and they ended up paying for it. TD is, I think, a good bank, and they're going to fall under the regulatory guidelines in the U.S., and they'll be able to buy a bank in the U.S. Like I said earlier, that's really the only way Canadian banks can really grow, right? Taking customers from other banks is very expensive, and so if they can just buy another bank and get their customers, and that works a lot easier. Um, yeah, BNS. So yeah, baby, you and I are on the same page. BNS has been cheap constantly and underperforming as well. They've had a run up recently, but um, the whole Latin America and the Caribbean enterprise that they just got out of, you know, they tried. So at least they tried something. But yeah, they were like, I always look at Canadian banks. I line them up with PEs. Like usually the most expensive bank is kind of like in the low double digits, so like 12, 13 maybe. And that's the most expensive, and then the least expensive is in high single digits for a PE ratio. And then I sort of figure in what the dividend yield is at the time, and then I'll usually buy the cheapest one. But the thing is, they sort of move along that line. The bank that's the most expensive will screw something up, sell off, their PE drops down, and they go to the back of the line, and then I buy them, and eventually they'll rotate around again. So I mean, you look at Royal Bank, and it's just had a huge run up. So I'm not buying them. I started buying them years ago when they were at $70 a share. So and bought them, at 90 and along the way. So Bibi says, do you think Royal and TD will keep raising the payout ratio? I don't think they really look at the payout ratio so much. They just want to increase the dividend, you know, 5 to 10% a year. They always know they're going to be able to pay it. I think if they get into 70% payout ratio or something like that, then they might start looking at it a little bit more closely. But as long as they're in the 60s, see what Royals is just for fun. Royals payout is at 49. Yeah, kind of 40 to 60, I think, is considered fairly safe. TD has a lot of cash on hand, which they want to spend on a U.S. bank, but they certainly don't have any trouble paying their dividend. Yeah, the thing is, the payout ratio is fine for financial institutions. For pretty much everything else, I look at the cash, where you add back in the depreciation. So I look at the cash flow. BNS, like they're able to pay it like maybe 70% payout ratio is on the high side, but they're not going to cut the dividend for that. Yeah, 74. It like that's not really a worry. I try for them to be 40 to 60, but if they're not, also don't forget that there is a lot of bad debt money set aside at all of the banks, which in case bad things happen in the Canadian real estate market, they're looking to have that money available. So as things become less risky in the Canadian real estate market, and the threat that they're going to have bad loans comes off, then the bad loan provisions get added back into profits, and then the payout ratio becomes better as well. So. Gaia, by the way, if you're still on, you were the first person to ask. If you're still on, we're talking about individual stocks, which, for a beginner probably wouldn't be the way to go. You can try your luck at it maybe later after you learn about the analysis, but otherwise, exchange traded funds would be probably the way for you to go. I was also curious if you're still on, Gaia, what you thought about the course, whether that was useful and it kind of got you started, or if you have any feedback, I'd be curious. Bibi says loan provisions, yes. However, my view is that Canada, we have a culture of sacrificing everything to allow for paying of mortgages. Absolutely true. Yeah, people will always pay their mortgages. I don't know why people worry that there's going to be these massive defaults and so on. Um, Even if the real estate market prices started dropping, you wouldn't have the same things as you do as that you did in 2008 in the U.S. The whole jingle mail thing, where people said, "Well, here's the keys. The house is yours," and I'm underwater, so I'm not gonna, I'm not gonna keep paying the mortgage. In Canada, with the exception of a couple of provinces, I believe Alberta, where I am, is one of them. Not that I intend to, I don't have a mortgage anyways, and I wouldn't intend to default on it. But basically, pretty much everywhere else, the bank will come after your other assets in order to pay off the mortgage. Um, so, like, there's no such thing as walking away from your mortgage in Canada as it was. So I don't know why they do the loan provision, like why it's such a big deal. Like people, like it's a tiny percentage that people default. Um, like in the U.S., you have real estate investors going after foreclosures, and in Canada, it's just not a thing. Like they're just so infrequent, and it's just not even worth it for investors. Bibi says probably because of an overall view on economics, but Canada has lots of immigrants like me. Welcome. Where I'm from, you will eat paper before losing your house. Yeah, I really find that it's a cultural thing. Uh, like I have some friends who like house is the thing, and real estate is the thing, and real estate investing and investing proper investment properties are the way to make money, and they don't believe in stock market or anything like that. Um, while other people is like, yeah, a house is the only thing, and I'm sort of fallen into that now. But the house is the only thing. Um, the house where I live is the only real estate I want to own, and then everything else is stocks and mutual funds because I don't want to deal with renters. I used to have 4 investment properties in the U.S., 2 in Phoenix, Arizona, and 2 in Las Vegas. And I sold the last one in 2023. I sold one per year. I had them all for a decade, and they were just a pain in the behind. The U.S. thing definitely compounded it, but it was not my favorite. And the thing was, I bought them all for cash. I didn't have any loans, so there was no leverage. So basically, they were appreciating, and yeah, absolutely, I made tons of money on it. But as far as rent, it was like 2 to 3% a year, because there was no leverage, and um, I just got tired of getting letters with pictures of garbage cans being left out after garbage day, that the renter was doing. So, anyways, and I definitely would not want to manage a renter myself here in Canada. So yeah, I don't think anybody wants to lose their house here either. In the U.S., it seemed to be a bit more of a thing, but also 2008, which is what I was talking about. I mean, that was an extraordinary thing. So Gaia says, I'm going through the course now, but I haven't finished it yet. Thank you very much. Yeah, no problem. I do have a couple of courses on the Canadian Money Talk website. One's a basic one, which I suggested to Gaia, and there's another advanced one, which is for the stock analysis. So. Bibi says, my approach as well. I have learned my lesson from your videos. Okay, you're welcome. No matter how much the profit, the headache is not worth it in dealing with people. It, yeah, but so some people seem to manage it. I am part of a mastermind investing group in Vancouver. I lived in Vancouver all my life and then moved to Edmonton 5 months ago. And there's one guy who's a realtor, and he has multiple houses around British Columbia, and he seems to enjoy it. He has, the upstairs renter show the downstairs suite, so he doesn't have to go to Kamloops or whatever. And he somehow manages to run it. Doesn't seem to be a big pain for him. And majority of his net worth is in real estate and not in the stocks. And then there was another gentleman who had two condos in Calgary, and he sold them both. He's like, I can't deal with it. It's just too much of a hassle, and it wasn't really making him much money anyways. Even though he bought them at a fairly decent time, like 3 years ago. So they did go up for him, and then he says, yeah, but then you pay the realtor and you pay the lawyers, and he's basically, I didn't make much in capital gains, and I wasn't making much in rent. So it depends what kind of person you are. It really depends on your luck of what kind of renter you get. I went to various seminars about commercial real estate, which is sort of the next step up if you want to own a mini mall or a small office building, or 12 doors, 24 doors of an apartment building. So you can do all of that. That requires a lot more knowledge and a lot deeper pockets. Um, I remember talking or going to a seminar and then talking afterwards with a guy who specialized in student housing. So he would have a multi-bedroom house that was where the bedrooms were configured. So yeah, you had some sort of privacy and then a common kitchen, and he would rent out by the room, but long term to college students. And he's like, yeah, the parents went on the lease. Everybody was responsible for everybody else. I don't know how he managed to get them to sign it, but maybe he had a good location near the school or whatever. I don't know. And he's like, I did not show up to collect rental checks. They gave me three types of payments, and I would start hitting the credit card first, and I would try the bank account, whatever it was, in sequence. If the credit card was maxed out, I went to the bank account and basically made everything electronic and automatic. So some people develop it, and they know what they're doing, and they make it work. Um, with real estate, you're supposed to be building that empire, and you can get past the usual 5 house limit. But like to me, I had 4 houses, and sometimes I would get 2, 3 emails a day from different ones, different property managers, And I'm just like, you get a couple more and that's a full-time job. And I worked in IT and I made way more money than in IT than the rent did. And arguably the IT annoyed me more than the renters, but um, yeah, it just wasn't for me. And that was all through property managers in the US. Um, and I mean, in certain provinces, you also have um, very tenant-friendly laws, and like you hear horror stories of somebody moving in and just having absolutely no intention of ever paying any rent, and then it takes you 8 to 12 months to get them out, and they never paid anything, and then if they feel nasty, they'll trash the place. So then again, with the various seminars and contacts that I talked about real estate, they said, you know what, it makes you feel really bad, but offer them $1,000 to move out in a week. Like, don't let them sit there for 8 months because that costs you way more in missed rent. Offer them $5,000 if they won't take 1,000. So it's a really interesting business. Um, Baby says, cannot imagine living with the fear that my tenant will stop paying and still live in my house. Yeah, absolutely. Rent is taxed as interest income. That's true. I look for tax efficiency, and so I have a good amount of my stuff, and you can see my portfolio if you're interested. Also on CanadianMoneyTalk.ca. Most of my stuff that I expect cash flow from is Canadian companies that pay Canadian eligible dividends, because most of my stuff is in non-registered. I ran out of RSP room a long time ago because I was incorporated, and then TFSA. I just today I bought $500 worth of stuff, and I'm looking forward to January 2nd when I can start buying more. So yeah, rent is taxed as interest income. I mean, you get the tax deductions, which is fine. Um, Stuff isn't free. You just get 20, 30, 40% off, whatever it is. But to me, um, you can't seem to find in Canada, like Vancouver and Toronto, forget it, especially anything that cash flows. So, like you're subsidizing a total stranger to live in your house, and if they stop paying, then yeah, God help you. I kind of thought about it, and I realized why real estate annoyed me so much. Your expectation is that you're going to get the rent on time and in full, and if that happens, your expectations have been met, but there's really no positive surprise. With stocks, I'm expecting volatility, like with the sizes of my accounts, like I'll get plus 20,000, minus 20,000 in one day. And that's expected. So if the stock drop, or if the stocks drop 20,000 in one day, I'm like, well, that's just part of it. But with the real estate, if something bad happens, air conditioning breaks in Arizona, and you're on the hook for 5 grand. Um, that basically what I'm saying is there's only negatives. There's really no upside. Nobody's going to give you a Christmas bonus. You know, your renter or your property manager. Your property manager will try to steal from you or charge you for something twice, and if you don't pick it up, then well, that's real now. So yeah, the taxation on rent kind of sucks. Interestingly enough, it builds up RSP room, I discovered, which you wouldn't really think, but it does. Phoebe says, if you don't mind me asking, why are you looking at property as investment? I am looking at the stock market, provides decent returns, tax better, and no one else can mess with your cash flow. Um, yeah, back in 2008, I took the opportunity and I bought one property in 2009, and then one each year after until I had four. I got out of them just because I wanted to travel and just because it wasn't really making that much money, and the big run up in the prices had happened during the decade that I held them. So I'm not looking at whatsoever. Absolutely not, actually. Um, I just want to do stocks at this point. But I did have experience with it. I tried it. It wasn't for me. Um, I had initially thought I would be 50-50 with my half my portfolio in stocks and half in real estate. Um, but I mean, even the houses I was buying were 100K in the US. And so I used stocks to save up for them. And then I discovered that stocks were easier and you don't have to plop down 100,000 for stock. You can plop down 5,000 and so it's easier to invest in the stocks. And then during that time, we also had one big long bull market. So yeah, and the companies didn't send me pictures with weeds in the front yard that I had to then forward on to the property managers, and then absolutely next month I got the same picture with the same weeds and sent it to the property manager. The property manager went out there, said, "Yep, weeds are in the front yard." I'm like, "Why didn't you pull them? You were there. Just why didn't you pull them?" Just so annoying because you have no control. I think that was the problem for me, and I certainly didn't want to have them living in my basement. Like that wasn't going to happen. Um, okay, where are we? So the answer, Bibi, is no. I'm not looking at properties at all. When I go jogging here in Edmonton, from where I start, I walk to and fro past a property for sale signs, and I'm like, oh, I wonder what price it is, and I'm like, don't be stupid. Yes, renters with more rights than owners make little sense to me. I think Alberta is more landlord friendly than BC, Quebec, and I want to say Ontario. I definitely heard it about BC and about Quebec, that they're very renter friendly. Baby then says, you mentioned that you worked in IT. Yep. Which means interacting with people. Yep. Also, the reasons why I disliked it. What are the chances that people will pay on time every month for 20 years? I would say it's zero. Um, like I had friends that had a renter living in their basement, and he had been there for 15 years and paid like clockwork. They invited him up for Christmas dinner and so on. Um, the thing is, people have priorities, and while they don't want to get thrown out, they and I mean depends on the kind of renter you get, but they'll have all sorts of excuses and oh I had this and that and the other thing. Um, like when I in Vancouver when I would take the bus, I would see people who's like, I don't have bus fare, and they just walk onto the bus. And then they pull out a cell phone, and then they would pull out a cigarette pack, and I'm like, well, looks like you have priorities for your money, but it's not. It's not for the bus. So if you get somebody who's like that with your rent, then you've got a lot of fun on your hands. Um, and the first time a renter would tell me, I'm just not going to pay you like that, that would not go over well. So I'm glad in the U.S. that I had the property management because I'd be like, no, no, this is not a charity. Bibi says Buffett says it's great to learn from your mistakes, but it's even better to learn from other people's mistakes. Yeah, absolutely. So thank you for going through the property experience and sharing it. Yeah, you're welcome. No problem. Um, the funny thing is, I read this somewhere. I'm like, it's so true. Is that people um, really experienced a tiny percentage of things that happened in the world, even during their own time, let alone in history. And yet we all go according to our experience, right? Like you could have had a completely different experience than I did, and yet we're both kind of going according to that, and it's considered well thought out because you're going from your experience. But like you personally experience only a tiny percentage of things that happened. Okay, Gaia. I'll give Gaia a chance here. Um, And the other five folks, feel free to ask. I'm hoping I'm entertaining, but do chime in. I do TikTok lives every second week, and the YouTube lives every second week. The TikToks I get like 50, 60 people on, and then I get behind in the messages. But I've only started doing YouTube lives recently, and so I the first one I did last time was I don't think I got past 10. So for me, it's super relaxing. So I'm enjoying this very much. But if you guys have questions, don't hold back. So Gaia says, Alesh, what would healthy ETFs portfolio make on a yearly basis if one makes moderate risk or chooses moderate risk? So return and risk go hand in hand, as Gaia says. The higher the volatility, over time, you'll get higher returns. But in the meantime, I'm not sure if you guys can see this, it's so choppy, you'll get a roller coaster ride. But if you have 10, 15, 20 years before you need the money out, you can invest in some risky stuff and don't look at it, and then you'll do well in the end. If you're looking for moderate risk, so let's say a 60-40 portfolio, so you'll get 60% stocks, 40% bonds, and I would, that's probably what you mean by moderate. So the bonds will take away some of the volatility, but they'll make lower returns. And so as long as you know yourself and that's what you're good with, then that's what you choose. But so an all stock portfolio, I think you would be looking at 8, 9, 10% at best on the average, right? You'll get 20% years. The S&P 500 had, is it 2019, 2020, and 2021, I believe, were 20% each year. And then you'll get negatives like 2022. So it averages out to, let's say, 7, 8, 9, 10. If you get into double digits, you're doing really well on the average. So that's stock only. Now, if you're doing some bonds in there, then you would be looking at 5, 6, 7. So if you need the money back within 5 years, let's say, then I would say 60, 40, 70, 30 kind of a portfolio. If you're not risk friendly, like for me, I don't care. I've had my portfolio drop significantly, and I still slept like a baby. So it really, if you had a financial advisor, they give you the questionnaire, the KYC, know your client, 20 questions, and they sort of get your risk profile from that. If you're doing it yourself, then you sort of need to eyeball it. So yeah, you probably want to look at, I'll at least consider some balanced portfolios, ETFs. So that would be 70-30, even 80-20, and then you would get, like I said, 5, 6, 7%. The the historical information is on the ETF prospectus, or see, Wealthsimple, I don't think has that much information. You kind of get what you pay for. But if I look at Qtrade, which is one of my brokerages, then they have 1 year, 3 year, 5 year, 10-year annual return. So you can look at it and you say that's not enough, or yeah, I'm happy with it. So it's a kind of a combination of what kind of a return you need and what time frame you have and what volatility you're able to put up with. Because like some people can't sleep at night. It's like, my God, I work so hard for that money. I don't know what's going to happen. Or even worse is I need that money to buy groceries, which makes that a real crisis. So, Guy, I hope I answered your question. If I didn't, ask me a little bit more specific. BB says that basement renter that paid on time for 15 years is the exception that proves the rule. Um, yeah, uh, I can't remember running across any studies about that. Yeah, the thing is, the landlord just wants the person out of there, so they don't even go out of their way to get it on their credit rating and so on to warn the next landlord. Um, yeah, the guy basically became almost a family friend for my buddy. So that is the exception. I remember one young lady I was dating. We were sitting on her balcony, and she points across the way and says, that townhouse over there? There's basically squatters sitting in there. Um, they moved in and they had zero intention of paying any rent at all, and now it's going to take months and months to get them out. So you kind of have both sides. Um, what definitely didn't add to my enjoyment of my properties was one of my properties had a flood. It was a three-story property, and the top story had a toilet, which apparently kept flowing and overflowing. And instead of just reaching back and shutting it off, the renter actually left the property, and the water ran down all three stories. And then it was like 15,000 to fix. What was even worse was the property manager estimated the damage to be 7, 8,000. The renter actually paid that, to my shock, whether they threatened her that they would take her to court or what. And then they kept asking me for more money. I'm like, well, you got the money from the renter, right? And well, by the time you move the couch and you pull back the carpet, I'm like, you people are kidding, right? So, um, so yeah, that was one bad experience, and then I had a bee infestation in another property because we knew about the nest when I was buying it. The person who was getting rid of the nest didn't close up the roof because they just couldn't be bothered. And new bees kept coming in, and the renters like had the bees inside. They had to put towels underneath the door to prevent the bees from coming in into the rest of the house. It just a dumpster fire. And then it's a year that you're not collecting any rent. So you get 15 years no problem with the rent, and then you get floods. And I mean every renter, sorry, every landlord has a bad renter. Okay. So Gaia says, I'm invested in real estate, which currently gives me a return of 7.2% yearly. Would it be more prudent to sell and invest it all in stocks, bonds from the return 9 to 10%? Um, so Gaia, the 7.2%, is that price appreciation or is that rent or both? Because like I said earlier, it's hard in Canada to get a house to cash flow, meaning you have money in your pocket at the end of the year, let alone getting 7.2%. And the fact that you have 7.2 means that it's a rental. Oh, that's just the rent. Oh, wow. 20% down? About years ago. Oh, I see. So it's not on the current value, which is sort of your opportunity cost. That's your alternative. It's on the original. Okay. All right. So I'm going to poke fun a little bit and say that you're cheating. Um, so would it be more prudent to sell? Yeah, but the house is likely to be more stable as far as price goes, and presumably as far as the rent as well, unless you get into one of our horror stories. While uh, it'll be the stocks that will get you, and I think I said 7, 8, 9, 10. and the next year could be horrible and you lose 10%. So in in the scenario that you presented there, I would say take the steady rental income, even though I would argue that it's probably much lower if you look at today's price and then see what percentage the rent is of that, it would probably be a lot lower. Um, in that case, the stocks might make better sense, but you get the increased volatility. So then it depends how many years you have and how comfortable you are with that volatility. And keep in mind, depending on, if you have a lucky rabbit's foot or whatever, um, the next year could be awesome, or it could be a minus 10%. So be careful. Guy says, or it could be too much of a gamble, especially if someone new investing to ETFs and stocks. Yeah, well, so don't do the stocks. Do ETFs that hold stocks, right? Just to be clear. Um, it's not a gamble; it's an investment. But to me, you know, you need a combination. Um, but you would want diversification, and um, you would really want to search inside to see how much volatility you're okay with. So Bruce says renting is a tough way to make money and lately high risk. Yeah, absolutely. Um, the real estate appreciates, and I mean, with stocks you can as well, but you can use leverage. You're putting 20% down, and therefore any money that you make is made off of that down payment. It's not made off of the full amount of the property, because that's not what you put down. So it's cash on cash return, right? Um, Going back to Gaia, I would really be curious what the current price is, and then what the actual rent, because it would have to be positive, just mathematically speaking. Whatever the rent is minus the expenses has to be a positive number if you have a 7.2% off of the original price. But it might be 1%, it might be 2% off the price today, because the price today is what we're talking about. That's what you would invest somewhere else, right? So the logic in the original question was a little bit, like I said, a little bit cheating. Um, about years ago, we talked about that. Baby says 7.2% includes the expenses from property taxes, repairs, difference in taxation. Um, no, after the deductions. Yeah, the 7.2 would be after the deductions. It it may be before taxes, though. Usually people don't include the taxes. Like the CRA taxes, the property taxes, I'm assuming same with the repairs. I mean, so these numbers, it really depends on the person as well. Some people will will start a slush fund for the roof. Just got a new roof. It's going to last 20 years. It cost me $10,000. I'm making this up. It cost me $10,000. So I'm going to put aside $500 every year to pay for the next roof, and then that comes away from the cash flow. Other people are really just what things cost them, and they don't leave things like that aside. So everybody does a little bit differently. Bibby says has to be, otherwise it implies a return of over 10%. Yeah, well, if Gaia bought the real estate a long time ago and now it's up, times 10, then she would just be getting 1% today. But like, to me, even getting any real estate to cash flow for years in Vancouver, and I heard the same thing about Toronto as well, is that the rent will pay for the mortgage, and then you're on your own for property taxes and insurance and anything that goes wrong. And like to me, that's not an investment; that's a speculation. There's no cash flow. You're depending on other people to increase real estate prices and to actually give you some sort of a return. And if you're bleeding a little bit of cash while you're working, not a problem. If you have to kick in 100, $200, nobody seems to see that as a problem. But real estate is a long-term game, and if you lose your job, then suddenly something that's bleeding cash might not be as nice. So, and of course, divorces, etc. So, I'm looking at the doggo, and every time I lean down, I'm petting her so she feels comfortable. It's a 3-month-old puppy, and she had some. I think she was upset from the shelter, so she had diarrhea and so on, and she slept all day today. And the first time she went out was when I let her out when I was on the live. So and then she just goes right back to sleep. She's a sweetie. Bibi says has to be, and then Gaia says, but I didn't pay today's price. Why would we take that into consideration? Yeah, thanks for the puppy. Um, I got her at the pound. She's very sweet. She's very sweet, very cuddly. Um, well, Gaia. So, as an example, let's say you bought it for 100,000 ages ago, and it's worth 1 million today. So, for your decision making, um, if you were to sell it, you would have $1 million to put into stocks. You wouldn't have 100,000. So, if you're comparing stock returns to the real estate returns, you have to see what, like I would anyways. You have to see what, like to compare apples to apples. You have to look at what you're going to be investing into the stocks versus what the real estate is worth today. I mean, you're looking at cash on cash, and yeah, for sure. Like my real estate made more than 2 or 3% as well, but my alternative is always what the current value is. So that's how I look at it. I mean, you can do that decision however you'd like, but um, yeah, same thing. Like to get something to cash flow, if it's fully paid off, then you should be able to make it pretty much anything cash flow. You should, but the rule is make it cash flow if there's 20% down and you're still paying the mortgage, and after all of that, it should still cash flow. Ethan says, okay, Ethan. I know who Ethan is. I did get a puppy on Monday. I don't own a car, those of you who don't follow me. So in minus 10-degree weather, I biked kind of halfway across Edmonton to go to the pound, 15 kilometers. And then I brought her home in my backpack, gave her one of my jackets as well. I had the backpack on my front instead of on the back so she could see, and her little head was looking around all the amazing things. And I got her home, and then she had just so much diarrhea because she was upset from the shelter. And yesterday was the same thing. Today was the first peaceful day. Um, and I slept with her last night in the kitchen on the tile. She got out 4 times to go to go to the bathroom. As soon as I felt her move, I woke up, ran to the patio door, let her out, and God bless her. 4 times she did the right thing, and what happened an hour ago was the fifth one. So um, she's super cuddly and super sweet. She's about 20 pounds now. I'm told she's going to be 60 to 70. So we'll see how that goes. But anyways, you guys aren't here for my puppy. Um, I did traveling last year. I took 3 months to go to the Far East, and after that, I I moved because it was easier to travel while I was in a condo rather than in a house, and then get a dog. That was sort of my plan. Sell the U.S. houses so I wouldn't get paper mail. Then I could travel. Then I could move. Then I could buy a dog. My life is all laid out. It definitely has been my plan for a while. Um, I think I might be too much of a planner. Anybody who wants spontaneity from me is going to be sorely disappointed. I mean, I can plan for some spontaneity, but I'm not sure if that counts. But anyways, yeah, Gaia. By the way, congratulations on the real estate. It sounds like you've done very well because it must have appreciated a ton. Um, the inclusion rate with the capital gains sucks. Did you try to, or did you consider to sell it before? Was it June when it kicked in? I also read an article on Money Sense where they said that it may not actually happen. There's some sort of a, is it a bill reading or something, or something legal that it may not actually happen. Guy says it's the only thing I understood, but I missed out on investing. Well, like I said earlier, some people are all about real estate and they don't trust the stock market. One of my friends works in construction, real drywaller. Um, Thanks to him, I can now do a very smooth lump if I ever need to repair any drywall. And he just wanted a rental property. He's a or buy an apartment building with good plumbing because plumbing is expensive and you have to rip out everything. But plumbing starts leaking while electric wires don't really break down. Um, the condo building where I was, the copper plumbing had pinhole leaks. Like it was very thin walled after 25 years, and um, so they put some goop or something inside it to prevent the pinhole leaks. But like that was not the main reason why I left, but it was certainly one of them. Um, Bibby says it cannot happen. Ottawa is deep in the red, and any and all taxes will be passed. Yeah, I just sort of scanned the article. I can't remember the reason for it, but there was a chance that it wasn't actually going to go through. Um, a good amount of my assets are actually in my corporation, and the corporations get the full inclusion rate from $1 of capital gains. At least with personal, it doesn't kick in until 250,000. So Ethan says happy for you, except for the minus 10 degrees, plus 14 here in Niagara. Well, yeah, it's gonna. I saw it was gonna be minus 20, and my neighbor keeps scaring me. He's minus 40, and then he topped himself saying minus 60. So I I don't know. By the way, showing love for the puppy, I turned up the thermostat. I had it at 9 Celsius inside, and then I just stayed in one room, had where the computer is, and had the electric heater on, and just came down into the kitchen to make my lunch, and then brought it all back up. Turned up the heat because the puppy's all over the house, and actually I'm on my laptop in the kitchen because that's where the tile is, because she's already had accidents pretty much everywhere else. Anyways, fascinating stuff, I'm sure. Gaia says, I just understood what you were trying to explain, i.e. current price. So if I were to sell it at today's price and invest into ETFs, it would probably make more. Correct. That's exactly what I was getting at. In my example where you bought it for 100,000 and now it's worth 1 million, if you're saying 7.2% on 100,000, then it would be 0.72%, a tenth of it on the million. So then I would feel pretty good that over at least a few years, the ETFs would beat that. It's a different way of thinking about it, like your point is more, I guess, cash on cash, right? The 100,000, let's say you put down. I'm sure the mortgage is long gone as well. Um, the other thing, and please understand this, it adds a ton of risk, but you can take a home equity line of credit if you can get a decent um, interest rate. I think mine is around 5%, which still kind of sucks. But then you can keep the house. You have 20% down. Um, so now your rent is being made off of the 20%, not the 100%, and then you invest the rest in the ETFs. But if something goes wrong, then you're in serious trouble. It's not for the faint-hearted. You're basically borrowing to invest. But then the interest becomes tax deductible and so on. You're basically using the investment property as a piggy bank, but that's a bit of risk. I like the funny thing is, since I'm up to date, I'm going to go off on a tangent. But one of the interesting thing about investment properties is the only way they make decent money is if you have them leveraged, meaning you put 20% down, and now you're getting a 5 to 1 improvement. So if you get $100 in rent, it's like if you're making 500 basically as a percentage. Um, but then people pay down the mortgage over time, which is de-risking the whole thing, but it's also lowering the returns. I don't know if that makes sense. So people are ready to retire. They have a couple of paid off properties, but those properties, if they're making anything, are making 1, 2, 3% a year. From those two properties, they could get an extra 8, and they would be making rent from 10 properties, right? If you use them as a piggy bank, the first two. That's how you're supposed to build your empire. But after you had those properties for 20, 30 years, you want them paid off because then the risk is gone, but so is the leverage. So that's sort of a interesting, I don't know if irony is the right word, but conundrum anyways. So yeah. Okay, so that was I think we answered Guy's question there. So real estate, if that's your thing, I talked about my friend the drywaller who only wanted real estate and really wanted no part of ETFs. Then I have a friend who's like me, who just wants to live in the real estate, and then everything else is stocks and so on. And then another friend of mine, he's just finishing building a quadplex. So, he's going to sell it off. So everybody's got their own thing. You kind of have to find what you're comfortable with and what'll make you money. So Gaia just extending her question, it would probably make more, but increasing the cash flow. Yeah, I'm not sure if I understand that, but maybe we answered it. Bibi says, what about investing in Europe? In all honesty, a good amount of my unhappiness with the US properties was dealing with all things US, whether it was getting money from the US where they sent me paper checks, which I had to go wait until all 4 of them came and then go to the bank to deposit them and then plead with the teller to take the 16-day hold off of it. And IRS disallowed some withholding when I sold one of the properties. There's a FERPTA, I can't remember exactly what it stands for, but for foreigners, they withhold 15%. And my accountant in the US had to get a US accountant, um, included it, and basically they messed it up at the IRS and they said, you owe us money. You owe us $30,000. That was the withholding. Um, and then they started putting interest on it. And then I phoned, I faxed all of these FERPTA documents. That somehow didn't make it into my file. So I phoned again. Um, Phoning them, you would be on hold for 2 hours and then it would automatically hang up on you. So, and that was US, our friends and neighbors. I cannot imagine what Europe would look like. Maybe if you're a native speaker, you know how things work, you have connections, God bless. But um, if if I had if I had a stroke or something and I decided to buy another investment property, it would definitely be in Canada and it would be next door. Um, I had to send in my Canadian original passport, not once, not twice, but 3 times over what, the 14 years that I had those properties, in order to get an individual identification number, ITIN, individual taxpayer identification number. Um, Once they kept the passport because it was expiring anyway, and then apparently I filled out a form wrong, sent the passport in, they declined it, sent the passport back, filled out the form again, because I included more than one reason to need my uh, taxpayer identification number renewed. I checked 2 boxes instead of one, and that just confused everybody apparently, and they declined it. So multiple phone calls again, filled out the form again, sent the passport in again. Just like words fail me on some of the stuff. The IRS withheld that $30,000 from me for 2 years. For 2 years. Okay, where am I? So we're talking about Europe. So yeah, the further afield, the more of a hassle it is. Never mind time differences and so on. But I mean, you have to go where the money is and where you'll make a profit. So like, yeah, it's nice to have it next door. Maybe not next door, but a couple houses down. But if it doesn't make you any money, then it's not an investment, right? Ethan says, it took me 20 years to realize this, took pride in paying them down. Yeah, no, I mean, that's fair, right? It, when you retire, you sort of want the low risk things. I mean, if you're in your 60s, especially. Um, so if it's paid off, then you're not going to lose it, even if the even if the renter screws you and you don't get any rent for a year. You should be able to carry the property taxes and the insurance. But if you're also making mortgage payments, then yeah, that house is probably gone. Um, the assumption that you're going to get the rent is a big assumption, as we talked about earlier. Bibi says, currently I'm buying Vanguard Europe. Oh, I'm sorry. So we were so Bibi, I thought we were still talking about real estate. You were talking about ETFs. Okay, fair enough. Not individual stocks, since it looks depressed. Um, I do have a few things in Europe. I have a few just international mutual funds where I let them make the decision what to invest in. It's all good. I wouldn't make individual decisions on anything outside of Canada and um, the US because it's just too hard to get research and get information. So I'll gladly pay 1.5% more for somebody to do that. Vanguard Europe, if it's just following an index, it's fine. Um, I'm more of an emerging markets person because that's where you're getting growth in the population, and you have the young population, like I mentioned earlier. Yeah, Guy, I thought you were talking about real estate as well in Europe. So you know, like Europe and Japan is the other one, and now China. There is no population growth, or it's declining, if anything. And like Japan, like imagine being a Japanese company where you're trying to make more money, and you have a bunch of old people who aren't working are savers, and there's no immigration because they don't like outsiders, as my travels confirmed. Um, and so yeah, I'm more of an emerging markets person. I do have EFI, which stands for Europe, Australasia, and Far East, but Far East is Japan. I do have an ETF for that as well. Otherwise, I let them make I let the mutual funds make make the individual decisions. Europe, there's squatters' rights. Yeah, like I mean, if somebody's living in a house, then I get that. You're not going to get somebody who walks in. But if the house is empty and they climb in a window and they say, "Okay, we'll live here now," like that's I'd, I'd knock on the door. I'd have a lit up Molotov cocktail. I'm like, you guys are either leaving or I'm burning this place down. I would not I would not be I would not be very keen on that. I'm joking, of course. Um, Bibi says, sorry, investing in Europe, a Canadian hedged ETF from Vanguard. Okay, I got that. I'm not looking for the problems with moving money from other countries. Yeah, it just becomes a horrible mess. Um, like just for the US, it just all became more complicated. Um, like my planner nature helped because I'm looking ahead. I'm like, okay, well, I got the rental check coming in, but I also have to pay the property taxes, and I have to in 2 months I have to renew the insurance. So why don't we convert only some of the U.S. dollars to Canadian and pay the 2% conversion currency conversion fee that my bank charges me, and then have American dollars for that property tax and for the insurance. So I was able to kind of look ahead and plan things out, so I wouldn't jump back and forth between U.S. and Canadian, Canadian back to U.S. and so on. Um, at one point, I think it was the city hall in Las Vegas who said they would not take even U.S. dollar checks, but cashed against a Canadian bank. They wanted an American bank. So then Royal Bank had an American branch, so had to open an account there. I think if I had gotten a U.S. credit card, it would have made my life easier as well. In Arizona, I ended up getting like a handy woman team who I just sent $2,000, and I said I'll spend it eventually. You guys just keep it, and then they were my one-stop shop for everything. They could do tiling, carpeting, painting, all of that, and then whatever they charged, they just took off the money that I had banked with them. So, I developed things like that, but it was just a pain in the behind. Um, okay, Gaia's smiley face Bibi says, I see you tried and experienced all the painful lessons of complications for limited gain. So, like with the U.S. real estate, I'm not gonna complain. Like it annoyed me. Um, the rent ended up being, because I bought them for cash in 2008. They wouldn't give a mortgage to a foreigner anyways. But what what happened is I bought them 88, 95, 110, and 140 for the four of them. And then I sold them for at least 300, and the last one was like 380. So they tripled. They tripled. So I certainly can't complain about the money. But it just like I would so much rather use that money, buy Royal Bank BNS to take us back to the start of the live. I would rather buy that uh, and get the cash flow being very tax efficient with the dividends, and they're going to pay the dividends. To be honest, maybe to give the property managers some credit, there were very, very few times when the rent was even late, and I can't remember there being anybody who didn't pay. So they did their job from that perspective. There were other problems, um, but yeah, I definitely got paid. And then because I was working contracts, occasionally I would get let go. They either ran out of work or money, and I would be getting 4,500 US per month, and with a paid off house in Surrey, not outskirt of Vancouver, I could easily live on that. So I certainly use those, but then I'm just like, yeah, I need to. They've come up a lot. I need to start getting rid of them. There's easier ways to make money. So Bruce says, yeah, ETFs have 2 years back 20%, and then people pile in like Black Friday deal, and then a bad year, and yeah. Um, ETFs. I mean, if it's just an index, then it'll do whatever it's doing. Um, what what I would really caution people about is trying to remember the word, like boutique ETFs. When something has been going up for a while, the Vanguard and iShares and all these other companies, let's develop an ETF for it. And then it takes another 6 months to a year to get those passed. And then they put them out. People pile in, as Bruce says, and that's just when the fad um, drops off. And I mean, I don't really want to call AI a fad, but let's say the metaverse, right? We all remember what happened to that. So there were ETFs for that. Um, Kathy Wood's ARC funds, which did great when we all thought we were going to be just communicating by Zoom, and um, everybody had free money, and they weren't really good investments. But that's how Kathy made some money, and then just terrible since then. Um, Baby says from 2008 until today, VFE tripled as well. Yeah, like remember from the depths of the financial crisis in 2008, 2009, like until arguably 2022, we've had one big long bull market. There were a couple of dips, 2011, 2018, a very quick dip and then recovery in 2020, but we've had one big long run up. I took advantage of it for sure, because in 2008 is when I got incorporated, started contracting, bought the U.S. houses, and started hardcore investing, so I could be financially independent. And so I took advantage of that big long run up. So um, even I remember when I gave my notice with my last contract in January 2020, before COVID. Um, COVID was just a gleam in some biomedical student's eye at that point. Um, so I was at 3.3 million net worth, and now I'm at 6.1. So like, and I wasn't working. So even like close to doubling in just in that time. But I took some risks when COVID made the market drop. I borrowed to invest, not a huge amount. I don't have access to that much money because it's all off of HELOCs, and my houses weren't $3 million houses. But I borrowed to invest because I'm just like, well, either technology is going to fix all this, or we're going to live in some Mad Max dystopian uh, world where nobody's going to care that I maxed out my HELOC a little while ago. Fortunately, we're all okay. We're all vaccinated, give or take. Bibi says, my view is that ETF means you are an investor that does not know how to identify a winning company. Okay, well, you certainly gave me like 5 minutes worth of material right there. In my mind, this is a signal that you should also not be buying specialized ETFs. Um, the specialized ETFs definitely I would avoid because they're usually a fad, and by the time the ETF comes out, the fad is probably close to over. The ETF coming out probably gives it a little bit more life, and then it's over. Um, Bruce says only triple. Actually, ETFs are okay only for investors that don't have knowledge, so safer for them. Yeah, like an ETF that follows a broad index will do for most people, in all honesty. Uh, those of us who know enough to be dangerous, we try to beat the market by getting individual stocks. Um, People tend to jump in. They're more traders. Like I'll get a good stock and I'll hold on to it literally for decades. Like I bought stuff in 2008 that I still hold. Um, so yeah, like some people play sector stocks, the 11 sectors like technology or energy or something like that. And then like I listened to a couple of podcasts where they're guessing at which sector is coming up, which sector is leaving. So if I only had 11 of them, and then I would be able to move the money fairly easily. Like I just have way too much stuff to like rework, let alone liquidate my entire portfolio on some sort of a hunch. Um, uh, Maybe I would sort of argue that identifying individual stocks, you'll get people who live and breathe it 12 hours a day, have all this research on Wall Street and Bay Street, and they still get it wrong. I remember on CNBC there was I forget the analyst's name, but basically she did the completely wrong thing. It was during earnings season, and I think she sold Meta and bought Amazon, and then Amazon had a bad quarter, so they tanked, and Meta did times like went up 20% because they had a good quarter, or it could be the other way. Anyways, she announced it. I remembered it next day. I'm like, oh, that went completely the wrong way for her. And next time she was on, there wasn't any apologies. No, geez, I really screwed that up. Jim Cramer is one who underperforms his index, which would be the S&P 500, by a ton. But he has an opinion. He's loud about it. He's entertaining. So not to go off on a tangent, but if if you think you can identify the winning companies, by all means do it. Use a core and explore portfolio where 80% of your portfolio is in ETFs, and then try to beat the market with 20% of your portfolio. And then once a year, check in and see what returns you got, and then what did the broad market ETFs get. If you can beat them on a consistent basis, you're a better man than I. And better than the hedge funds. Remember that bet with the hedge fund that Warren Buffett made that the S&P 500 was going to beat them, and it did handily. Um, so yeah, you can pick stocks as long, but don't be a gambler. Don't just remember the one time you were right. Don't just remember your last win. Make sure you're actually beating the index, or there's no point. You're spending extra time away from family, hobbies, whatever it is, and you're not actually making more money, right? So, like, if you're part of an investing club, then you find the stock analysis entertaining, but it still shouldn't be losing you money. Anyways, I think I covered that. Um, I do agree with Bruce that ETFs are fine. Get either all in one world ETF, or do like I do and have like one for Canada, one for US, one for developed markets, which is that EFI one, and then one for emerging markets. Um, and then you can rebalance them if you want, or like right now on a monthly basis, I'm putting $500 only into the emerging markets one. And I actually sold some of the US to take some profits. Well, it's in the TFSA, so profits don't matter. Um, to take some profits, and I dumped it into the emerging markets one. So you have more flexibility that way if you want it. Otherwise, do it all in one. Bibi says safe and also 10% average return for someone who can just buy it and not be interested in anything. Anything is great in my opinion. Um, yeah, like if you just want to save for your retirement or save for your child's college or for financial independence, ETFs are fine. I do hold mutual funds, which I check on every so often, and I make sure that they're beating their index, which would be the same thing that the ETF follows. So the mutual funds, even after fees, their are beating the ETFs basically. I have people scream at me every time I mention mutual funds because they just got such a bad rep. Um, you can pick out that 20% that do beat their benchmark consistently. So, San, oh, new person. San says, I have 50% in VFV and 50% in XQQ. That's going to be something with NASDAQ, I'm assuming. TFSA this year, should I continue the same? I'm an international student with 2K monthly income via scholarship and awards. Okay. So VFV is the S&P 500. Let me just quickly check, right? Obviously, I don't know your risk preference. And then there was the XQQ, which is NASDAQ, Canadian hedged. Okay, so you're just getting the NASDAQ movements. Yeah, I mean, as a student, I'm assuming you're fairly young. So if you have a long time frame, if you're aware of what you're doing, then you should have a fairly good risk tolerance. And if you don't need the money for at least 10 years, that sounds good to me. Like, don't take this as financial advice. I don't know you, but um, that that's okay. There is some overlap with those, by the way. Like Tesla, I believe, is in both indexes because Nasdaq is a stock exchange, while the S&P 500 is an index. New York Stock Exchange is the other exchange. So there is overlap between VFE and XQQ or QQQ or QQC and all those other permutations. But especially with the technology, like I think technology will do well over a long run, but you'll have a lot of volatility along the way. Bibi says, maybe the syntax on the chat is not passing my intent. I'm arguing that indexing is the best way. Okay, I've kind of got the opposite understanding. Apologies. I'm arguing that indexing is the best way, and individuals or focused ETFs less so. Okay. Maybe if there was sarcasm or something, I didn't pick up on it. And Bruce says, yeah, for me, learning investment was expensive doing dumb things, and ETFs at least take care of that for new learners until they're okay. Yeah, when I started investing when I started investing, it was like 1 year out of university, second job out of university. A financial advisor wandered into the office and trying to drum up business. And because I lived at home and had a scholarship, I actually had and worked during my school years. I actually had $10,000 and then a decent job, already starting in IT. And so I invested the $10,000, and I mean, it was probably the markets as well. I couldn't tell you what the performance on the mutual funds was. other than the net result was basically flat. What made me unhappy was that there were all sorts of fees, both, if you guys remember, the deferred sales charge fees on mutual funds, that if you sell it within 7 years, they'll charge you like 6%, and then it's decreasing. So I got hit with that when I wanted the money out for a down payment on a house. There was some sort of a wrapper thing which cost $200 a year, and then if you want to get out of it, you have to pay for 1 more year. And so there were all sorts of things. And then in the library, completely by accident, I came across a Morningstar book. You know, the analysis agency, stocks and mutual funds. So I learned how their star system works and all that, and then, knew enough to be dangerous, kept having financial advisors, and then I got a Q-Trade discount brokerage and started doing individual stocks, which I think, much like Bruce, was a bit of a disaster, which, it is what it is. But got better at it over time, obviously with experience and further education. But let's face it, some of it is luck. Baby says, Bruce, that is my approach as well. Buy the broad indexes monthly, and when a big market displacement is happening, like COVID, TD, laundering money, etc., pounce on individuals. Yeah, I mean, everybody has their own process. I would again suggest that 80-20 thing, where 80% is in the broad market indexes. You're putting in money as you make it over time, and then whether you have money set aside for opportunities. I mean, TD could do something stupid, or it could take them 3 years before the regulators, let them go. So like, who knows, as well. But I'm also buying TD, by the way. Bruce says, definitely I see bank stock tank. That's a buying opportunity. It'll recover. Canadian banks are like amazing. They're not going to double or triple your money in a year, but they're going to keep paying the dividend. They've been paying the dividend for a century, and that's really all I want from any of my investments. If they appreciate, great. I don't want them to go to zero, but if they stay flat and they pay me 6%, God bless. So, Bibi says, my disaster was Synovus. I own Synovus now, actually, not much of it, like 10 grand or something, but bought at 22, it went down to 3, then I sold on the way up at my cost, missing out on the returns. Anecdotally, meaning I haven't done a survey, I haven't done a study, but just from what I observed, if you hang on to something long enough, kind of 70-80% will come back and recover. I sold out on, what was it, Vermilion, which sort of recovered as well, just to parallel Bibi's Synovus. Multiple stocks. I had one stock go to zero. It went bankrupt. Otherwise, like, if you wait long enough, I had a gold stock. I don't do gold stocks anymore, but I had to take my money for a nice ride down and back up again. Titanium Trucking was another one that like, if you give it long enough, they'll recover. If they're paying a dividend along the way, it makes you feel better. I do get that dividends aren't free. I hope everybody understands that they're not magic. But it makes you feel better when the stock is tanking. Obviously, if the whole market is tanking, then it's an overall buying opportunity. And it's not that your particular stocks are just being singled out, like it's the whole market. Just as an aside, I don't hold any cash as an opportunity fund or even for emergency fund. I know it's not the safest thing to do, but if I had an emergency, and I don't seem to have them, because I'm preventive usually. Like, I know this place, I'll get a new roof next summer, and I know roughly how much it'll be, so I start putting money aside. But because I have constant income from dividends, I don't want to hold cash. And as far as opportunities, like the thing is, as soon as I get money, I put it into the market if I have money available. Um, and then my rule is if the market goes down more than 20% from a recent high, meaning a bear market, then I will borrow to invest because then at that point it's worth paying the interest. So that's sort of my procedure. 3 to 6 months emergency fund is definitely what everybody says. So BB says, I do own utilities, but I cannot justify it. Banks pay a rock solid dividend. Yeah, they haven't cut their dividend literally for a century. They weren't always increasing it, like during the crisis, but they haven't cut it for a century. Like imagine being a CEO on whose watch your bank cuts the dividend, like they're jumping off the building. Um, and it's usually higher than utilities. Well, I mean, you'll get 5-6% depending on the bank, right? Which still nothing to sneeze at. Like Canadian stocks, by the way, seem to be higher than American for some reason. Plus, in a non-registered account, they're mostly taxed very favorably. Baby continues. I think I own them just to see what more than five stocks. Oh, just to see more than five stocks in my brokerage. Yeah. Bruce says, yeah, I had my share, nothing major, but enough. It's the Flash EV charge point stock. Oh, I remember that. At $40 to $3, learn fast. Fortunately, didn't buy much. I had one of the guys in the Vancouver Mastermind investing group say the most brilliant thing. Forgive me if you've heard it already. I know there's some cross pollination between the TikTok lives and here, but I said it's too bad when you learn from your mistakes. It always costs you money. And this gentleman said, well, that's how you remember it, because if it didn't cost you any money, you wouldn't remember it. If you're doing paper trading, say. So yeah, we all learn something, but the thing is, the next stock is going to be a little bit different, and the outcome could be different as well. So like we're all kind of guessing at it. BB says probably because Americans never heard of Canada. Yeah, that could very well be. I had when I was selling one of the houses, I was using my property manager for a realtor as well, just because it was easier. I didn't have to transfer um, transfer the water and the gas to my name, etc. And like I already sort of knew at least that he wasn't a total thief. And this was like I guess 5 years back now, and this was when one of the snowbirds had one of the aerobatics team members had an accident and died, and he's like, my condolences, and I I I think I sort of heard of it, but I didn't hear any of the details. And I'm like, yeah, I didn't know him, right? Like, there's back then there were like 35 million of us. So yeah, the Americans have a slightly different picture of us, I think, than if they know about us at all, right? Like I wouldn't be shocked that the weather forecasts are in Fahrenheit in the U.S. and in Celsius in Canada, obviously, and if an American is like, geez, look, they drew the border in the right place. Look how much colder it is right when you cross the border. Anywho, oh, cool guys. I've been at it for an hour 45. So any last questions? I'm gonna pay attention to the puppy who's still snoring away, but she might want to have some pets. Bruce has actually did a no-no all in one basket of bank stock, made amazing, but never recommended that to anyone. But it dropped. Okay, but it dropped 30. it dropped 30 in 2023 with CIBC anyway. Better diversified, but I did lots of research. Yeah, amazing, but never recommended that to anyone. Well, I mean, we all have an opinion, right? As far as recommending things, you could be right, you could be wrong. Um, I remember somebody, it wasn't at the water cooler at work, but it was certainly in the cafeteria at the last job. Um, it was the cannabis stocks. It's like, oh, and there's health uses and so on, and so he bought all into the cannabis stocks, and like they still haven't done anything. So, we all have an opinion. Um, I mean, I always, when I talk about stuff, I'm just like that. It's my opinion. Like I don't have a crystal ball, right? Ethan says, "Thanks for the live. You're most welcome. I like YouTube for you. A little breathing room." Yeah. Ethan, known by a different name on TikTok, is watching me be 20 minutes behind on my, or 30 minutes behind on my questions, and people asking what questions is he answering because I'm so far behind, because I get like 30, 40, 50, maximum was 70, which I'm just like, yeah, it's great being popular, but it's not really fun for me. So I'm happy with the smaller number here. BB says, thanks very much for your time. Always fun to chat with fellow investors. Yeah, absolutely. Bruce says, no problem. Was good. Take care. Yeah. So I'll do a TikTok one, same channel name. I'll do a TikTok one next week, and then YouTube again in 2 weeks. Baby says, people bemoan the market but forget all pension and benefits are paid from market returns. So, so are, excuse me, so they are in the market whether they like it or not. Um, Granted, tax money will be used if any shortfalls. Um, the CPP is well funded, by the way. I listened to basically the auditor for CPP on a podcast for decades. So anybody of any age, and then yeah, they'll make adjustments. But a lot of pension funds, I'm trying to remember the CPP one, but they're actually not that heavily into the market like they seem to be. A lot of private equity, usually infrastructure, real estate, that kind of stuff. Um, I hope they have a better experience with private equity than I have. Mine is at best lukewarm. But yeah, 407, that's the highway, right? In Ontario. Sorry if I'm wrong. Um, but yeah, they might not like the volatility that you could get in the markets. Okay, yeah. I landed in Toronto Airport, and I think that was sort of it. Um, but yeah, I'm sure they do have some indexes. Bruce says, I worry about 2025 with U.S. and tariffs highly inflationary. It'll affect their market. Yeah, we talked about that very early on in this live. They they feel like they would be inflationary. It may not be. He may not even implement them. He's just using them to scare other countries. Um, he doesn't want high interest rates, and so if somebody explained to him that there might be inflation, and then that will cause the Fed to increase interest rates, that might put him off. It could also be price of oil or price of rent that will be inflationary. So who knows? Um, Politicians in general, and I mean Trump in particular, they say lots of things. Um, the one that comes to mind is the stupid wall with Mexico that Mexico was going to pay for, like that. Like anybody listening to him is just like, what is he talking about? You can't force another government to pay for something like that. And of course he didn't. No wall got built, and that was it. So um, he can he can talk all he wants if he doesn't implement it. He did implement it some, and then it was just dysfunctional. Then countries started implementing counter tariffs, and like it got you nowhere. Like it's just dumb. By the way, I read an article which I found interesting. You would think that they're calling it deglobalization, right? It's actually like it feels like there's basically no trade happening at all. All that's happening between COVID and Trump was that it was slowing down the rate of increases in trade, which I like. The news just warps it. They make it sound like we're all going to be completely isolationist. All that was happening was that the rate of increase in trade between countries was slowing, which which is to me is quite interesting. Um, he can force NAFTA changes through, says Bibby. Um, I guess, but I mean, he renegotiated with Canada what 6 years ago, 7 years ago, I can't remember. So, like, yeah, he could try it again. I don't know, but the old softwood lumber, like all of that stuff, could come up again. Um, who knows? Who knows? I think like just the type of person he is, he wants to get he wants to negotiate a good deal for himself, U.S., whatever. So anyone here positioning for possible Keystone? No, I own a couple of pipelines, but not. I think it's TC, right? That's doing Keystone. I own Pembina and Enbridge. Bruce says, I'm glad I'm strictly in Canadian stocks, Enbridge, Manulife, CIBC, and now South Bow. That's my mother Bow. Yeah, yeah, I don't have TC. I looked at them. I can't remember what I didn't like about them, but there was something. Yeah, my pipelines are Pembina, which has been doing amazing, which I've held for ages. Just kept paying that dividend. I mean, they're basically renting space. They're like credit card companies for infrastructure. Yeah, TC and yeah TRP. I know there was a little bit of manipulation there. Okay. Okay, cool guys. Well, I enjoyed the discussion. I hope it was useful to everybody, and again in a couple of weeks. If you're on TikTok, same time next week, Wednesday, starting 7 p.m. Mountain, if you want. And I do weekly YouTube videos. If you want to subscribe, well, to YouTube ideally, but also CanadianTalk.ca. There's some resources, courses, and so on if you're interested. So all of you, where do I end it here? I will talk to you guys in a couple of weeks. Bye.